Hello, everyone. Welcome to Switch Markets Live webinar series. I'm Shane Vernier. Today, we're going to talk about the opening range breakout strategy. Now, we're going to show you a couple different ways to trade this strategy. We're going to start with U.S. equities, and then we're going to show you how to use it on the Forex, and then we're going to show you how to maybe improve your entries and where you can find all this material if you're interested in the ORB strategy. So I want to go ahead and get started, relatively quickly. We've got a lot going on, so good to see everybody back in the room. Candyman, good to see you there. Andrea Garwell, good to see you. Great sell on gold. Andrea, that was a banger. We're going to start with that one. I was very, very pleased with it, and we got to talk key numbers before we talk ORB. The problem with a key number is that they just don't come up good enough. Boy, when they come up, I mean, you really, really are missing the boat if you're not getting in on those trades. Next week, we're going to do a key levels webinar because I've been talking a lot about this strategy and the way to trade these key levels, and I probably just need to break it down in some of the things that you guys can look for on a daily basis where you can get these trades. But this was an absolute fantastic trade. We're going to start off there with a little trade update. So thank you. Good to see everybody. Tuku in the house. Good to see you, Tuku. Gordon Williams, always a pleasure, guys. So the Switch Markets Live webinar series, we've got our team from Switch Markets that are active traders that join these live streams maybe to brush up on their trading and ask questions, and also the team from How to Trade. A lot of our veteran traders like to join these streams so they can get in, maybe get a few insights. So let's go ahead and just get going here. We've got a lot to cover, and right here, this is the opening range breakout strategy. We're going to just go through it step by step, and I'm going to show you exactly how to execute these trades and how to find them. Remember, if you want to trade any of these ideas, head on over to switchmarkets.com. There's a lot going on there. We've got a whole new tools section. Also, Switch Markets on YouTube. If you're not over there yet, you might want to get over there. We've got a whole slug of YouTube videos getting ready to drop. Those are going to be fantastic. I'm excited about them. Also, we've got a bunch of new really features that are value added to the trader. I got a private message today that was a little bit interesting, and it's honestly something that I just don't know anything about, and I'm checking with the back office. A lot of the bonuses are going to be sort of jurisdictional, meaning some jurisdictions will allow for bonuses, some jurisdictions will allow for higher leverage, but if you're in one that maybe you can't take the bonus or you can't get the higher leverage, we do apologize. Switch is always working to make sure that the traders get the absolute most out of the service. So if you run into a discrepancy, if you're looking for a specific bonus, you need to probably contact live support before you go ahead and open up an account and deposit. Now, you're probably not going to find any other broker or any other person that's going to tell you that type of thing, but really check first. If those bonuses and things are really important to you, you need to get in there and find out exactly what you're eligible for. But there are a tremendous number of bonuses, and there's something for everyone over at Switch. For me personally, one of the things I always look for out of a broker, and I'm in the United States, so I don't get to trade with Switch, but one of the things I look for is always tight spreads, and I like the leverage, and also the commissions have to be as low as possible. And especially if you're trading futures, Switch, I believe, offers CFDs on all the futures products, but you can get zero commission accounts there, which is interesting, and tight spreads. So go ahead and check that out. If you're having any issues at all, be sure to reach out to me over at How to Trade, and we'll do our best to get you in touch with the right people and get all your questions answered. All right. Enough of that housekeeping. Trade update. Like Andrea said, fantastic sell there on the gold market. Let's go ahead and get in there. Bobby Bob, good to see you lead. Always a pleasure, guys. When you do get into a trade like this, the only problem with it is there's just not enough of them. And it's frustrating, man. It can be really frustrating because you'd love to be able to show up to the office every single day and place these trades. And that's why a lot of the short time frame strategies that you're shown, that's really that's what's favored on social media, on YouTube. They want the 5-minute trades, the 1-minute trades, all that stuff, so you can sit down and trade every single day. And I really recommend just waiting for those cherry setups, those real long-term nice setups. And when you get an opportunity, do your best not to miss it. I heard a great saying the other day, and it really pertains to trading. Let's say you execute at a 10 level, and even if your setups are at a 5 level, you're still a pretty good trader. But if you execute at a 10 level and your trades or your trade setups are at a 10 level, you're a great trader and you're an amazing trader. That's what a lot of the institutions and the big folks do. They literally wait until the odds are stacked so heavily in their favor, and then they push in all their chips and they take the money. Now, the one challenge that we're going to have doing that is we don't have as much money as the institutions do. We don't have Warren Buffett money. We don't have Charlie Munger. We don't have their money. We just don't have it. And if you don't have it, you've got to do the best you can with short time frames. And we've got all sorts of game plans for that. That's why we're going to talk the ORB today. All right, let's go back over this one. We're looking at 42, 42.50 sell. Realistically, there was three very, very close calls to that. All right. What you've got here is you had a situation during the overnight where we went right up to 42, 42.13. And right now you'll see that the spread on gold is about 70. Back then it was probably going to be greater than that. I would be shocked if the spread didn't gobble you up then and get you short. If that wasn't the case, that's okay. Also, your brokers, the brokers on spot gold, all the data is going to be a little bit different. It just will be. It'll be a little bit different. Right here, we're looking at Forex, but if you look at Owanda, if you look at FXCM, all those data points are just a little bit different, and that's because you're dealing in an OTC spot market. Now, what we had there was a nice approach right there above my picture and a tremendous sell-off. That realistically is what I was thinking. This is what I wanted, 42.13, and you could see they just stepped in and buried that market down to about 42.04. That was what we call the easy money. Now, if you didn't get that trade, the trade's not over. You still have a couple other opportunities right here that came across the board at about 4 a.m. my time, 6 a.m. Eastern. You're about, 3.5 hours ahead of that U.S. Open. Your high right there is 42.43. So that got you in. The problem is you didn't really get that big pullback. Low right there's 34. We're looking for 27. So you sort of meandered around for quite some time until you got right in here, right around about an hour ahead of the U.S. Open. Nice big rally. You took a little bit of heat, but then you got a fantastic sell-off down there to 42.27, 42.27.73. Once again, the spread is big enough. Those are close calls, depending on your broker, but you probably got the 1,500 pips there. And if you didn't, and this is a good teachable moment, if you're riding that train and you took the big draw and now you're just within a few pips of your profit target, I mean, honestly, you're like 1,440-something pips in the bag, and you decided to let that thing run against you, I really can't help you. I mean, you've got to be able to say, okay, I'm almost there. Do I wait this one out? Do I move my stop? What do I do? I don't care at that point, even if you move it to break even. You cannot take a loss on that trade. It went too positive, and it did it too fast to ignore taking the money. Take the money. If you get a chance, and and I'm not talking about, it just went 500. No, it went almost the entire way, 1,450 or something. Don't hem-haw around there. Even if you just move your stop to maybe above the 5-minute bar, above a 1-minute bar, or you just take the profits, you can't let that trade get away from you. Last thing I'm going to say about key levels, and then we're talking opening range breakouts. This compression right around 42.50, I actually wrote it in the live chat in the How to Trade trading room. I said we got some great sellers there. Once this level goes, get out of the way. And you've got to be out right now. You can't be holding shorts. You're going to run into major trouble. If you're still holding shorts, I don't really know what to tell you. I really don't know what to tell you. You're seeing a little bit of compression right here, up right around 42.75. I would forget about that and focus on the bigger levels, the key levels. The next one up is going to be 4,500. Right now, we're closing in on 4,300. We could get there very, very quickly, ladies and gentlemen. We could get there very, very quickly. So for me, I'm moving my entries, and we're going to talk about how to scalp that. Probably next week, but 4,500 probably going to be the next short, then 4,750, then 5,000 will be the biggest position. Probably there's going to be a lot of shorts coming in right underneath 5,000. I want to start off with a trade update, just sort of show exactly what we've been up to here on the realistically in the trading room. It's been pretty good. If you guys don't check out these daily live streams, be sure to do so and ask any questions you want. Okay, let's talk opening range breakout here. Let me see. Yes, sir. Good to see you. Yes, sir. Welcome. Opening range breakout strategy is one of our more popular over on the How to Trade Calm YouTube channel. Let's just go ahead and show you exactly where to find this stuff. This is just how to trade. If you put that inside of your YouTube, you're going to get this other channel that we've been running for quite some time. We're sort of transitioning. Our newer content is going to be located on Switch Markets, a much smaller channel. Granted, a much smaller channel. There's only about 700 or 800 subscribers, but we're not worried about that. What we want to do is we want to make sure that the information is getting out there and people can use it. So I don't care if you find these videos on how to trade. Forex Signals is another huge channel that we run here, and then also the Switch Markets is just a little guy, just started, but it's going to be getting bigger and bigger as time moves forward. Now, we live stream on all three channels. I recommend viewing the live streams on the Switch Markets channel just because you'll get this exclusive webinar. You'll notice we're not streaming here. We're not on X. We're not anywhere for this webinar. This is for our How to Trade community and our Switch Markets community. Okay, so what we have here is just a collection of videos. Now, ORB, Opening Range Breakout, have been pretty popular. A lot of folks really liked it. This is how we improve the entries. You can come down here. You'll also notice the Forex ORB. We're going to talk a little bit about the Forex ORB strategy. I think that's a pretty darn good one as well. And then the original, which was just the opening range breakout trading strategy right there. And you can see it's one of our more popular videos. A lot of folks really like this orb because it's going to give you guaranteed trades every day. So that how to trade, just put that in your YouTube and it'll take you right over there and you'll see all our videos and live streams and shorts and everything. So definitely want to know where to find this material if you're interested in pursuing this further. Okay, so what the orb essentially is it's a way to trade the most volatile periods of the day. Now, it's going to be different for Forex, but right now we're going to start with U.S. equities because that's sort of our bread and butter with the orb. We know exactly when the volume is going to be coming into the market, and we know when it's going to be leaving the market. So let's say we're going to be looking at the opens and the closes. Well, number one, we're not going to be trading the closes. This is the open. We're going to be looking to trade the open. So you have 3 sessions that open per day. We're going to leave out the Australian sessions. No offense. We've got some great clients that are down under, but a lot of times you don't get quite the volume that you're looking for out of that Australian session. If you were going to do that with a Forex pair, you would just want to focus on that daily Forex open. Now, there's 3 big ones, Tokyo, London, and New York. Okay, those are going to be interesting periods of time because if you're going to set up an opening range, you need to do it right after the open. So we're going to talk a little more about this, but if you're going to go, let's say, trade in the yen or the Great Britain pound or U.S. opening equities, you're going to want to do it right after these times, and you're going to have to translate these to GMT. We're going to focus on the New York Open right now because we want to get some live trades and or at least show you how today's orb trades are going. Now, the idea behind an orb trade, if you're trading the U.S. equities indices, and there's 4 of them that you could focus on. There's the U.S. 100, the NASDAQ, the U.S. 500, which is the S&P 500, the U.S. 30, which is your Dow 30, and then also you've got the Russell 2000, which I haven't even mentioned on a live stream, I don't think, in years. We can start looking at the Russell if you want, but I really don't think there's any reason for it. I would be focused on my U.S. 500, U.S. 30, and NASDAQ. That gives you a great cross-section of stocks. The the Russell 2000 is going to be based on those small cap stocks. So we're going to be looking at these New York Opens right now we're going to do it. We've got about, 2 hours into the session, and I want to make sure that we've already got some orb setups, and I've been looking and spotting them. So, and then after that, we're going to go ahead and dive into your Forex pairs and show you exactly how to do this on a Forex. Now, what we're going to focus on, no matter what market we're looking at, it's going to be the 2-candle orb setup. 2-candle orb setup. This is the most basic way that you can build an opening range. The first 2 candles. Now, why do we use 2? Why not just 1? Because we want to see how price behaves at least over maybe an opening period and the subsequent period. A lot of times, especially right after the open, you will see traders that'll base their decisions maybe off of the opening first 15 or the second 15. We want a little bit of information there. Now, you can use this strategy on any time frame. You can go down to a 1 minute if you want, or a 30-second. You can do anything you want. Just be forewarned that as your duration gets smaller, as that time frame gets smaller, your likelihood of getting chopped out and taking a loss becomes greater. It just does. And the reason why is as you reduce your granularity, the range itself is going to become smaller. So a basic rule of thumb that we're looking at for U.S. stocks is going to be a 15-minute chart and a 30-minute chart. And I'm going to show you the difference here in a second. For Forex pairs, we're going to be looking at a 30-minute chart and a 4-hour chart. In my opinion, I believe that those time frames give you enough to work with where you can build positive expectation trades and you're not just going to get chopped to death every single time out. All right. Now, it's ideal for equities, commodities, and maybe applied to Forex. Commodities are a little bit unique. We may have to do a commodities orb video all of its own because gold's tricky, especially if we get into the futures contracts. You got to be very, very specific on when you start that orb. I'll talk about that some other time. We're not going to do it today because it's a really big topic. Maybe we'll just do gold and like crude oil futures on another webinar because it's too much for right now. As far as what we're really looking to do is we're just going to look to isolate. Now, we're going to talk about improving our entries once we get our orb drawn and how to get in on all the action and sway risk versus reward in your favor. But for right this minute, let's just focus on drawing our orbs. So what are we looking for? Remember, you're looking for your first 2 candles after the open on any time frame. You're playing a breakout to a key level. Your key levels could be your overnight highs, your overnight lows, previous day's highs, previous lows, previous week's high, previous week's low, previous month's high, previous month's low. Those would be basic key levels. You could also use big round numbers. We're going to talk a little bit about that, especially when we look at what happened in the US 100 today. So, all right, guys, let's go ahead and spot an orb. Now, this is your 15-minute chart for your US 100. All right, that's going to be your NASDAQ. What do you have right there? You've got your opening 15 minutes and your secondary 15 minutes. Those are your two bars. Now, the way that I like to do this is very simple. I like to take a rectangle and I like to draw my range. That's my range. Okay, in order for us to understand how to trade this thing, we've got to identify our entries and our exits and understand how risk versus reward works. All right, on this trade, right here was your opening range. There's your opening 15 minutes. There's your second 15 minutes. So that's your first 30 minutes of trade on Wall Street after that 9:30 a.m. Eastern open. Now, where would we enter this on this orb? You're looking for the first candle that closes outside of your opening range. In this case, you would have bought right there. Right there would have been your entry. Now, where would your stop loss have been? Your stop loss would have been right beneath the range. So right there, what happened? You lost. No question about it. Is there a clue that maybe could have kept us out of this trade? Absolutely. There's a big clue. 25,000 is a key level. You're buying into 25,000. You're either going to break 25,000 and really roll higher, or you're going to reject it. I mean, that would have been a really difficult trade to take. I know. You're saying that because it's a loser. No, I'm not. I'm telling you that buying right there, keep your fingers crossed. Now, if you bought right here and you took this trade, where would your profit target have to be? You've got options. Number one, you're already trading sort of at the high of the day. Do you have an overnight high or low to work with? No. Would you have to use a smart money concept? Potentially. You can see right up here on this 15-minute chart where your order block was, right up in here, your liquidity sweep that developed on Friday, this zone right up in here. All right, so let's say we were going to shoot for a return up there and really look to regain all of Friday's losses. That would have been sort of your profit target. So did you have a positive risk versus reward trade going? Well, if you're going to stop yourself out at the bottom of your range, which is the traditional way to do this, the orb, was it a decent trade? Remember, every time you take a trade, for it to be a good one, you've got to have a decent entry and decent exit points. And when your exit points line up and you have a positive risk versus reward type of a trade, is your trade a solid? Well, you're looking at about a 1.3 risk versus reward ratio. Your stop loss is down there. It's not a bad trade. It really wasn't a bad trade. This is one of the reasons why traders really love using 15-minute charts and real tight time frames, is because they don't. It's like, we lost, but we didn't get nailed on it. Okay, so if we said, okay, Shane, is that a good trade? I'd say, well, it lost, so no, it didn't help you. Steve Francis, good to see you. It didn't help you, but you did get a decent entry point. You had a concrete finite stop loss, and you had a pretty darn good profit target that was doable. If we break above 25,000, I'll be honest with you, from experience, if you do break and close up above 25,000, you're going to make a run up there and probably fill that in relatively quickly. Was it a risk worth taking? The only risks worth taking are the ones that we can handle. That means you've got to have 1 to 3% of your account on any given trade. I will give you 5% because I like to risk things too. I'm not afraid to throw down. So I understand if you've got to go 5%. Just understand that when you get above 5% of all of your trading account balance, if you lose 3 or 4 of these things in a row, your history, you're going to have a real big problem coming back. So something like this, pretty darn good trade, 1 to 3%. Let's say you put 1% on it or 3%. That's all doable. That's a loss that you really can't afford to take. Now, there's a couple other ways to trade this, and I really want to illustrate these because it sort of sheds a little light on time frame and how important that is. Now, with your 15-minute chart, you probably, do you really want to do this with your stop loss? A lot of folks really believe in putting their stop loss beneath that trigger bar, that entry bar right there, the bar that closes outside of your orb. The thing is you're going to find yourself getting stopped out an awful lot. Now, if you're okay with it, you can see how that skews risk versus reward in your favor. It really does. So, if your entry doesn't change and you're still looking for that top of market structure, basically you're playing a breakout above 25,000, I really don't have a problem with it. So now you're at about a 1 to or a 2 to 1, a reward risk. So you're looking for about a 2 to 1 payoff. Is that good? Is that bad? Understand that when you play these things tight, what's going to happen? Your winning percentage is going to go down. That's just the way that it is. That's the way trading is across all time frames in all markets. The tighter you play these, the more you're going to get stopped. That doesn't mean it's a bad thing. It could be a very, very good thing. You might take a trade like this and say, well, I got a 1.9. I've almost got a 2-to-1 payoff, and I'm hitting these things about 50% of the time. Do you have a winning strategy on your hands? Yeah, you do. Absolutely. Of course you do. Now, here's what we really want to talk about, and what I stress, and a lot of traders argue with me, and honestly, I'm cool with it. You guys, I will never damper anybody's creativity when it comes to trading. I will never do it because it's very important that we understand that everybody's going to do things differently. We're all going to do things differently. For me, when I think of opening ranges, especially with U.S. equities, 30-minute chart. 30-minute chart to me is everything. Right there is your opening. There's your one. There's your first bar. If I could find my highlighter, we'd be in business. Right there, 7:30 a.m. That's going to be 9:30 Eastern. So there's your first bar, and there's your second bar. What happened? You didn't get chopped out. You gave the trade more time to develop and more time to set up. Your range is going to be right here. Okay, we got the head fake up above your range, and now we've reversed. That's fantastic because by giving this thing more time, we actually stayed out of the way of that failed auction at 25,000, and now we've got the market sort of coming off, showing us what it really is for today. Now, we've got a couple of options here. Number one, we can see that we're working on a break beneath our range. If we get a close down here, we can just sell the market wherever this close may be. All right, wherever it may be. And you're going to say, okay, Shane, what if it's down here? Stop loss, remember where our stop loss is going to be. It's going to be right above this range. It's not going to be above this tail. If you want to put it above 25,000, you can, but you're no longer orb trading. You're no longer orb trading. You're just taking a shot, which is fine. I don't have a problem with that. Just watch your risk. So something like this could be your stop loss. And if, let's say, maybe you can move your stop loss down here. All right, whatever you want to do. Let's just go ahead and keep it conventional for right now. Well, if we want to make our entries better and we want to say, okay, why should I sell right here when half of the time or 60% of the time price rotates back up into our range before we get our directional move? I'd say we have options. We have something for that. All right, we've got a couple of things that we can do. We can improve our entry using the 50% rule or Fibonacci retracements. So let's go ahead and just show you what the 50% rule is. 50% is easy. You've got your range, the top of your range, the bottom of your range, right there. About half of it, and I eyeballed it, but that would be your entry point. So what you would do is you would wait for a close outside of this orb, and then you would look to enter somewhere up in here to the short. So you're going to get the close outside of the orb. That's going to qualify the trade. That's going to be sort of, okay, now we're short, retracement back up in there, then we take it. The beauty of this is you're going to have a chance to really make some money because you're cutting your risk way down, and you're still not necessarily violating the tenets of the orb trade. The only problem is you're going to miss those trades that just break out in your favor. So we're going to watch this and see exactly how this develops, and we'll be looking to enter the trade potentially here in the next 7 minutes. From there, I'll show you exactly how to build this thing, and we'll sort of walk through it. Now, that's for the US 100. The US 500, you'll notice, here's our 15-minute chart. What happened to us? The same exact thing. Why? Because equities are doing the same thing today. There's our 1 and 2 bars. There's our range. What happened? Right up there. There was your buy. You got stopped out. It didn't work. Now, if we're working a 15-minute right now, okay, so a 15-minute orb, would we still be targeting this orb, this opening range? No. Why? Because it's been violated. You had a break here. Remember, opening range breakout. We're trading breakouts. We want it to break out one direction or the other. The idea that we can just say, okay, well, now it's on this side of the range, and now I'm going to go ahead and sell it, doesn't work like that. It really doesn't work like that. And actually, I made a mistake here. I made a mistake in my market read. I thought we were going to be the same. We were not the same. This right here would have been your entry, your sell. There's your first 15 minutes, your second 15 minutes. There would have been your sell. You still would have lost. So this range is sort of null and void in my opinion. If you do take a loss on it, you don't come back and reverse your position or do any of that nonsense. You will find yourself losing over and over and over again. When the market gets choppy, it sort of brings us that barcode formation. Then you run into trouble doing this. Let's back off to a 30-minute and see what happens. So where's our 30-minute range at? There's your first bar, your opening 30. There's your second 30. Not too shabby. So what do you have? You had a head fake up above your range, and now you're coming down, and you have a potential sell. So we'll go ahead and execute these here in just a second. In about 4 minutes, 45 seconds, we'll execute these orb trades and show you exactly what we're looking at. Now, let me go ahead. I'm running like 3 live chats. Let me see. Good to see you, Universal. How's my day? I'm doing very well, Universal. Thank you for asking. Can't beat it. Thursday, pretty good trading out there. I think the gold trade really made me smile. I thought it was a good one. This right here, though, we're coming off big. We're going to have a trade here in about the next 4 minutes. Now, on the Forex, you're going to have to make some decisions on the Forex about exactly how you want to trade it. Now, I made a video on this. It's on that How to Trade channel. It's called How to Trade the Forex with Your Opening Range. One of the ways, the very easiest is going to be your two candle orb. But for the Forex, it's going to be a little bit different. It's going to be either product specific, or it's going to be just right after the opening, the weekly open. So when we're looking at something like this, I'm saying, okay, if it's product specific, I'm going to trade like the Japanese yen, probably use a 30-minute chart, first 2 bars after the Tokyo Open. If I'm trading the Great Britain pound euro, I'm probably going to do that, the 30-minute bars, 2 30-minute bars after the London Open. If I'm trading the USD, if I'm paired up with like the dollar yen or the Great Britain pound euro, the European currencies or the Asia currencies, I probably could trade anytime I wanted if I want to take a position up there. New York Open, though, let's say I wanted to trade the dollar index, probably a pretty good time. It's probably a real good time to be trading like the Great Britain pound USD as well. Why? Because that is involving both your London session, your UK traders, and your US traders. That could be very good. The Euro USD right during that period could be very good as well. Remember, that's what we call the overlap. That's when everybody in Europe's trading and everybody in New York's trading. So right there up until that London close from the New York Open, that's probably the best time to be doing this type of thing, at least if you're going to use a 30-minute time frame. For now, what we're going to do is we're going to stick with the easiest way, and that is going to be your 2-bar strategy right after the weekly open. Now, remember, your weekly Forex open, for me, it's going to come like on a Sunday, depending on where you're at. It might be Monday morning for you. It might be Monday afternoon. Just depends on where you're trading from. This area right here, though, this would have been my first 2 bars. Now, I love the 4-hour chart on your Forex pairs. It gives us big enough ranges to attack. It really helps us develop a way that we can engage the market from a position of strength, meaning our orb should be pretty good. So let's go ahead and take a look at what we've got here. 1, 2. And this would have happened this week. So that would have been our orb. That would have been the first 8 hours of trade this week. So what would the trade have looked like? There would have been your short. There would have been your stop loss right up above your orb, right in this zone. There's your sell, 115.86. Pretty nice little move. What's your low down there? 115.42. What were you risking? About what, 50, 54, something like that, or 44? That's pretty close to a 1-to-1 payoff there. It's not a bad one at all. Now, you could have waited for a retracement right here and got probably a little bit better payoff, but still not bad. You got a little bit of a move. It wasn't great. Probably about a 1-to-1. Very, very similar to that. So that's sort of what you can do with that opening range for a Forex pair, and you can do that on any Forex pair. Let's say you wanted to do it on the Kiwi CAD. Kiwi CAD right here, 4-hour chart. What did you have? Right here, there was your close on October 10th. There's October 12th's open. What would this range have looked like? That would have been your range. What would your sell have been? You'd have sold right there, and you'd have lost. That's the orb. That's the orb for the Forex. All right, I want to execute a couple of these live so we can actually do this. We got about 56 seconds left. We're either going to go US 100 or US 500. Let's go ahead and go US 100. This gives us an opportunity to have sort of a clean break. This is a 30-minute orb. Okay, because we didn't trade 15 minutes, we're not even in the market yet. In my opinion, if I'm trading US equities, the indices, this is what I'm looking to do. I'm looking for 30-minute charts. I'm looking for 30-minute orbs because they give us a better range and a better opportunity to trade it. Now, let's go ahead and get our demo, our paper trader lined up here on your, on our trading view. Let's trade it. We're going to look to sell. This is going to be a traditional market order because I want to sell right on this bar close. We already know that we're out. We already know that we're outside of our orb and we're going to get our close. We know where our stop loss needs to be. We're going to go ahead and sell this thing. Sell market. 4, 3, 2, 1. There's your open. There's your sell. Okay, we just sold. Now, where are we going to build our trade? Okay, we're in. We know exactly what we have to do. We've got some options. Let's say I want to play this really tight. My stop loss, let's put it right up above our trigger bar instead of on top of our range. What do I want my take profit to be? It's got to be at least what I risked. Now remember, breakout trading's a little bit different. It's a little bit different. You can shoot for your 1 to 2s, 1 to 3s, 1 to 4s because you are playing a breakout. So this right here, what are we looking at here? We're up a little bit of money. We're looking at about, 7,000 there. And remember, these are just demo dollars. We're not going to worry about the exact totals. But let's say I'm risking like 5,000, and we're looking to make 7,000. So what is that? About about 1.1, something like that, 1.5, something like that. Let's take it all the way down to a 1 to 2. Okay, that's what your 1 to 2 trade would look like. You're basically playing for a clean break out of your NASDAQ, Are you looking to really capitalize in on that? Absolutely. Take a look at what you've got there. You've got yesterday's low. Yesterday's low, and you're not even there. This is sort of where you would be shooting for that liquidity sweep. So if you wanted to execute this trade in this fashion, you certainly could do that. If you wanted to do it traditionally, you could move your stop right up above your orb, right up above your opening range. And that it gives you more of a 1-to-1 trade. If you want to take a 1-to-1 trade, something like that, you could bring your profit target in right here, which is sort of in the middle of that liquidity sweep. That's all there is to it. That's ORB trading. For me, the most important things that you guys are going to have to figure out is what time frames you want to do and what stop losses you want to do, something like that. Okay, so that's sort of the traditional way of trading the ORB. Those are the two places to put your stop losses. For me, I think the absolute best way is just to keep it above your range. I really do, and sort of take that position. For day traders, 30-minute chart day trading, you're in pretty darn good shape executing with your stop loss up above the range. All you're doing is betting that your range is going to come off the rest of the day. I really like that. If you move your stop loss here, the risk versus reward is an absolute banger. You're looking at like a 1 to 2. You can bring this up about a 1 to 2. I understand how that's appealing. I do. I get it. And we're talking about breakouts, so you could definitely get that money right there. I have no problem with that. But you're going to find that your success rate will go down because a lot of times we sort of trade back up in here and sort of chop sideways, and you end up, I got stopped out, and then you get your move. It's just something to think about there, especially if the distance between the top of this bar and the top of your range isn't necessarily that great. So you look at the US 500. All right, let's take a look at a different way to trade this. Now, let's say that I am saying, okay, but price typically always pulls back into my range, especially with something like the US 500. How do I want to enter this thing? You've got a couple of options. First is the 50% rule, which we're just going to eyeball, and I'm just going to look at it this way. That could be your entry right there. That would be your sell. So you can look to put a sell limit order right there. Sell limit, 50%. We know where our stop loss is going to be. It's going to be above the range. And what's your trade going to look like? Now, this is where things get really exciting because if you are, let's say, a big fan of those order blocks where you've got really this liquidity sweep that's down in this area, okay, I mean, now the chart really is starting to look like a smart money concept chart, but it is what it is. So something like this, if that's going to be your ultimate goal for your trade, and you're short position and you want to go ahead and get short right there, and you're looking at a target down in here, and you're looking at a stop loss up in here, you can start seeing how that is more of a traditional look at what you see on YouTube all day long. For a 4, a 10x, a 5x, a 4x, a 20x. That's not really how I like to do business, but a lot of folks love it, and they love it because they don't have to be right very often, and when they are right, they make a lot of money, and when they're wrong, it's understandable because, hey, the next time, we're going to get them next time. Here's one thing I would point out about the ORB, and if you want to do this, go in on this 50%, nothing wrong with that. If you do get that entry, look what has to happen. Let's say if we're just going to trade a 1-to-1, which is sort of my bread and butter. You guys are tired of hearing it by now, I'm sure. So that's sort of my bread and butter. What has to happen to sort of oscillate from the middle of this range, back down to my profit target? Nothing. I don't have to make new daily lows. I don't really probably even have to get a big sweep of liquidity or anything. More than likely, you're just going to rotate sideways and get filled up and move on to the next trade. That's what I call camouflage, trading the middle. Nobody really, I mean, when we're in the middle of this range, it's open for debate whether we're going higher or lower. We don't know, all right? We don't know. That gives me a pretty darn good chance of winning. You're going to win this trade a lot more than you win this trade. Now, Doesn't mean that you're going to be more profitable, though. It only takes you don't have to hit very many 4-to-1s payoffs before you're doing well. You're in the money. Something to think about there. All right, let's do one last exercise here. If we want to enter, say, let's get our Fibonacci's back on our 30 minutes here, 7:30. Right there. There's our range. Last way we can improve our entries, Fibonacci retracements. Top of your range, right there to the bottom, something like that. 38% retracement gives us a chance to sell right on the bottom of that range, sort of still with the intraday trend. That's not a bad idea. You could also wait for a 62% retracement, which is inside of the range. That's one of my, sort of your bread and butter. You want to go in on a retracement level that's actually inside of the range. These qualify. This 38% is actually right on the line of your downside constraints there. Is that a good trade? That could be a pretty good entry. So what's better than selling? I mean, you can see where you sell down here, right? What's better than selling down here? Selling up here. The only problem that you have is sometimes the market doesn't come back, and that's when you miss out on those true breakout days that really do pay you off. So you've got to sort of understand what you want to do risk-wise before you get into it. But the way that you would execute this, let's just pull up our paper trader here, and the way that you would execute it would be relatively straightforward. What would you do? Order. You're going to want to limit order to the sell. You're going to want to put that thing right in there, right around your 38% level. You could go there. You could go at 50 or 62. Probably, let's just go ahead and play that 38% and see what happens. So that would be your order. So if you had that order, 38%, where's your stop loss going to be? You've got options. You could put it right up at the top of your orb, somewhere up in there. You could try to maybe put it behind a Fibonacci level inside of the orb. I wouldn't do that. I would just use the top of my orb as my stop out point. And then as far as your take profit goes, what are you going to do? You could either dial it into, say, a 1-to-1, something like that. You could go 1.5 to 1, a 2 to 1. You could go down to your market structure like we did on that NASDAQ trade somewhere down in here near yesterday's low. Lots of things we can do. So the orb gives you tremendous flexibility, tremendous strategic flexibility, and it's really a strategy that I've grown to appreciate over the years. This is the way that the old pit traders used to trade. They would wait for the first hour of trade, and then they would have an AB high, and they would have an AB low, and then they would be looking to play a break out of that range according to what the market did the previous day. So, if you had a chance maybe to break over a high, you'd be looking to grab a long position there. Under a low, you'd go short. That's really how the old pit traders did this. And it really can translate to the screen, but what you've got to do is you've got to dial in your time frame, you've got to dial in your expectations, and you've got to figure out exactly what you want to get out of the market in that way. If you do that, then you've got a pretty good approach. You've got good entries, consistent stop out points, and you've got strategic options to really skew risk versus reward in your favor. Something to think about there. How's our US 100 trade doing? It's not doing really great. It's not doing anything just yet. We sort of took out that New York low. We need to make a run. This order block here could be a challenge for us down at 24.7. But if you do break beneath that, I think you probably make a run down in that liquidity zone. I'm a big fan of 1-to-1s. We'll do something like this. So we'll leave it at 1-to-2, see if we get a bearish move. With this much news in the market, we could certainly get it. What has to happen from this point right now? We're trading 24.8. Okay, where's the market have to go for us to win? It's got to go what? 214 points. What was our entry? Our entry right there was 24,792. So it has to go basically 200 points in our favor to the downside. The NASDAQ can do that in about 5 minutes. So I really wouldn't. I'm not too worried about this trade. We'll see if it develops or not. If it doesn't, it doesn't. All right, guys, I'm going to go ahead and sign off for right this minute. It's been an interesting session. A lot going on with our news. Remember, tomorrow we are not scheduled for a live stream. Tomorrow I'm going to be out of the office. I have some other engagements. The live stream schedule will be set, though, and it's going to be better than it was this week. This week was really hard. I was trying to get CPI live, and I wanted NFP live. We're not getting either of them this week. Next week, we get CPI on Friday. That's going to be our headline event, and probably the rest of the week, we're going to do another one of these live webinar series, either Wednesday or Thursday, but the rest of the week, it's all going to be going right around that 1 p.m. Eastern like we usually do. All right, guys, that's a wrap. If you have any questions at all, be sure to head on over to How to Trade. I got asked something earlier today, Shane, how do I send you a private message? And I go, well, it's relatively easy. You go over to the How to Trade trading room, you log in. My picture's up there. It's usually a circle with a green thing around it. Click that picture, and you'll have an opportunity to message me, and you can go ahead and send me a private message, and I will get back to you in short order. That's about it. That's about all there is to it. All right, everybody, that's the opening range breakout trading strategy. Remember, it can be applied really to anything. As far as U.S. equities, that's really the easiest thing for me to show you during this period. We're very, very active. We could get a definite move. As far as what we're looking at for your Forex, I really like those two Forex 4-hour bars right after the weekly open. That's relatively simple, but if you're trading like yen, maybe the first two 30-minute bars after the Tokyo open, the key is just to get a good range. That's all there is to it, guys. All right, everybody, I'm going to sign off for now. You have a fantastic trading day. Be watching the news. We've got another government shutdown vote later today. If they do vote to reopen, that might throw things into flux a little bit, but I doubt it. And then also there's a lot of tariff talk out there that's really making things difficult on traders. We'll be back Monday with all the news of the day and some fresh trade ideas. I will have a trade idea posted out later today, so you're going to want to hang on for that. But, boy, congratulations to everybody that got the gold trade. It was a pretty darn good one. All right, fantastic, everybody. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.